All right. Good morning, everybody. Welcome back to another edition of the Empower Hour for Tri-State, where we strive to go ahead and bring you incredible value from top producers across Family First Life. And I know today will be absolute fire because bringing the heat is Tri-State's Rookie of the Year from FFL Orbix Capital, Mr. Mike Hamade. Mike, thanks for joining us, man. How you doing?
Pleasure to be here. Fantastic. How are you?
I'm doing great, man. So happy to have you on here. This has been 2 weeks in the making since you were on with John and the telesales Zoom that we had. You brought incredible value that day. So much more to unpack, man. So we're really looking forward to it. But if you could, we like to, Mike, we like to find out a little bit about the producer, behind FFL. So tell us a little bit about yourself, man. Where are you from? I know that you're brand new in the industry, but tell us a little bit about yourself and what you like to do outside of FFL.
From Dearborn, Michigan, right outside of Detroit. And I'd say I'm a very boring guy, man. I like I lived life young. I lived really young. I was 30 when I was 15, if that makes sense. You know what I mean?
Yeah.
So I got out of my system. 33 years old, finally married, got a 10-and-a-half-month-old boy. Honestly, man, I don't love anything more than work, to be real. That's what I like for fun. I like work. Anything straight up work. So
work. That's awesome, dude. So family man, 10-and-a-half-year-old baby boy, right? How long you been married?
Since August of 2022. But I've been with the same woman since like I think 2021. Can't remember, but I know when I got married though, so I'm not that bad.
There you go, man. Hey, that's important, right? My wife can never remember the day that we met, the day that we got married. I'm always the guy that remembers that, so I give her a break. But typically it's the guys. So kudos to you. That forget. So kudos to you for remembering. But bro, awesome. So obviously, given your success, I can tell that you just love to work, right? You don't have any outside distractions. The only thing that you're focused on is what you're building within your company and how to improve on that.
Yeah, I'm laser focused. Big time laser focus, and I'll do like maybe 10 things at the same time, so that's how I'm able to get so much done. It's not like I'm a superhuman salesman. I'm just an average guy, but like I said on the last Zoom that we had, the last live dial that we had, it's all about speed, efficiency, like a madman. You got to have 2-3 monitors, things like that. That's just the way that I operate. If you go work smarter and work harder, you're gonna dominate.
Yeah, obviously, man. So I kind of want to break that down. I mean, when you say you do 10 things at once, like for somebody like me, dude, I see a squirrel, dude, I'm off to something else, and it seems like I can never get anything done, bro. I'm just upfront and honest with you. I'm transparent. And so how do you stay on task with doing so many different things all at once?
Great question. There's a great app that I use called Motion. I'll have that open on my third monitor. It connects all my calendars, and I'm able to just tell Motion what time, what place, etc., what I got to do. And usually, if I'm doing multiple things at the same time, they got to correlate.
Okay,
you know what I mean? If I'm doing my trades, for example, and at the same time listening to an agent's call, that's an easy multitask right there versus vacuum trying to talk to a client.
Yeah. So you just said something I keyed in on that. You said doing trades. So you have a financial background as well.
Yeah, that's where I come from. So I jumped into life insurance honestly because I was becoming too introverted.
Okay.
And I want that for my son, you know what I mean? To see his mom and dad home all the time. But the father loses respect that way, in my opinion. A man should always be out the house working if they got a family,
Yeah.
So I live that single retired life no more.
Gotcha.
Trading's done very well for me. I'm very good with it. and I still earn a killing off it. I murdered oil this last week, took it from 71 to 78 with heavy margins. But it helps though, because knowing that, having that type of background and being able to talk to a client, my iPad, it goes hand in hand. It's not like I'm doing anything I don't believe in. You know what I mean?
No, I like that. And I want to break down that iPad philosophy here in a second as well. But when you got into insurance and you saw the inadequacies, the inefficiencies of the business and how you could improve on that, let's talk about that for a little bit, because I think that, when I heard you talk with Mark Mead on his podcast, right, I was like, this guy's absolutely killing it.
Yeah.
And then I looked into like a CRM and we put one in place, but it's just not that easy, dude. To say, all right, I'm going to get a CRM. We're going to go ahead and automate everything. There's a lot of work that goes behind that, right? Can you talk a little bit about that and kind of like give people a heads up that don't have a CRM with texting capabilities and things like that, the amount of work that goes into it and what you have to do to keep up to speed
Oh my
on a
God.
day?
I wasn't about it. And I can understand why this industry has a high turnover rate. It's very discouraging when you come into it and you see that you have to use phone burner plus Ringy plus Excel sheets plus manually dialing from your phone and then going through 50, 100 calls, nobody picking up. You're not going to do it twice. When you just can click a button, slap your headset on, chill while the music's playing, or run some trades, or check your emails while the phone is still ringing through your clients, like that's how you'll be able to survive.
Got it. Now, when you're which CRM are you? Is it your own proprietary CRM or is it an outside CRM that you're using?
I'm using an outside one. I honestly was going to replicate it, but I said, forget it. It's not like it's anything that's patentable. The only thing proprietary that I have, how we all use Slack for anything. I cut Slack out a long time ago and have been training a bot, and the bot is almost done. It'll be on subscription. It's trained on every carrier, on every product, on every guideline. It's with my sales methods, my sales questions, my counter objections. It's just trained A to Z to be a monster life insurance agent that knows everything. So that one is proprietary, and that's going to be badass. Instead of waiting on a human response when you got a client on the line, you have an answer in seconds. But the CRM that I use is Follow Up Bus. It's a real estate CRM, and I come from a background of tech, so for me to even use a real estate CRM for life insurance, it's a badass CRM. And for $109 a month, you got everything. You got a dialer. You could add branded calls for 6 cents a call. You have unlimited text messaging capabilities. You could set up templates, so you could just click, 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 click. I'm not sitting there typing the same text messages. You have email templates, etc. It connects to your calendar. It connects to your email. You could real-time track metrics. I could see how many of my agents are on the phone, not on the phone, who they got missed calls from. We take client service serious. As of lately, I've been writing deals for my agents. I personally stopped producing maybe 2-3 months ago, unless referrals. So what I love about the CRM, if you're running an agency, I go to the reporting at night and I see my agents who has missed calls. And if they had an incoming call from a client 4 or 5 hours ago and they already left for the day, I'd want to lose my mind, but they're not a W-2 employee. There's only so much I can do. So I'll call the client and close it for my agent.
Oh, wow.
Yeah, and that's what I love about it. I can see awesome. Everything.
Yeah. Now, for everybody that's, looking into CRMs, things like that, it does take work. You have to work the system. It's not a magic pill or anything else. It's going to be, you're going to get out of it what you put into it, is what I'm finding out. And if you don't put a lot into it, because it does work, you're not going to get a lot out of it. So just know, it's not just a plug and play. You're going to have to, teach it, and things like that. So So you've got the follow-up system. I don't want to spend too much time on that, but I really want to get into the IUL space, right? Now, tell me a little bit about why Index Universal Life. Are you more just IULs? Are you more mortgage protection? Are you more like whatever fits the client? What's your approach to that, Mike?
Whatever fits the client. Anything
Good.
that fits the client. And I usually let the client know in the most respectful way. They're not going to tell me what they need. I'm going to tell them what they need. But I'm not going to tell them what they need. I'm going to ask them open-ended questions that make them realize what they need. That's the key to sales. The key to sales is not me telling you, hey, Shannon, this is what you need, blah, 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 blah. No, it's just me literally understanding you, digging deep right into you so you can have a therapy session with me, self-realization regarding your income, property, assets, and debts. And I just sprinkle through every single one. I already know what I'm giving you in the first minute and a half, you know?
Got it.
Those open-ended questions are going to help you identify what you need. And at the end, we just roll right into it. Everything is a roll into transition. I'm not going to sit there and ask you if your wife is on board. Can you afford it? This and that. No, we already went through the whole thing. Habibi, we're doing business.
Got it. Well, let's, I know you did this with John and it was awesome because I love your approach. You're just like, dude, you have no filter and you just approach people like you would talk to your friend. And I think, I think that your clients probably really appreciate that. Right. So role play with me for a little bit and how you approach that first minute and a half of the call, because you said, I know what I'm going to provide you within that first 90 seconds. Let's go ahead and approach that, through a role play.
I got you. Hey, Shannon, how you doing, brother?
I'm good, man. Who's this?
Good. This is Mike. I'm calling in regards to the generational wealth that made online about becoming your own bank. Talk to me, man. What were you looking for?
Oh, yeah, man. That's awesome. Yeah, I'm just looking to, Mike, I'm just looking for something to put my money where it's safe. I've got a business and, I need, I like what it had to offer as far as being able to take loans from it, this and that. So talk to me a little bit about it, man. How's it work?
I'm with you, brother. It works in a lot of ways, and I can definitely relate. I have quite a few entities myself. That's the reason why I sell these, because I believe in them and I use them, especially being self-employed, man. Tax loopholes. And I don't want to go buy property, right, and have to get a HELOC and deal with all that credit and equity bullshit. So this kind of works the same way, my brother. What I like to do with my clients, it's not one size fits all. I was the top-rated IUL selling agent in the country last year. I got there by not treating my clients like statistics. So I'm going to ask you some boring questions, man. That okay with you?
Yeah, boring's good.
Let's do it. So what do you do for a living? You told me you're self-employed. Talk to me about your business.
Yeah, I'm a insurance broker.
What kind?
Life. This isn't going too well, man. I don't know shit from Shinola about IULs and I own an insurance agency.
Well, that's confusing. So I think.
Hey, Mike. I'm sorry, man. I'm a sales manager in the automotive industry. Let's go to my previous employer. Yeah.
Sales. Are you? Well, you mentioned self-employed. So are you like 1099 base or are you W-2?
No, I own a small dealership.
How long you been doing that?
About 5 years.
About 5 years. Okay. Are you married, single, separated?
Married, 2 kids, 1 granddaughter.
Congrats, man. Are you head of household? Does your wife work?
I am head of household, sir.
Fantastic. You're a family man. Like, what are you averaging annually for the last 2 years? And we're not talking about what's getting reported to Uncle Sam. You can be real with me.
Okay, about 250K.
Okay, 250K. And then what do you end up paying the IRS at the end of the year?
Too much. I've got a pretty creative accountant. I pay about, say, 40K.
About 40K. So they got you down to a 27% tax bracket after deductions.
You got it.
So the way that this works, what I love about this is the money that you put in is tax deductible. The interest that you compound, the money that you grow, is non-taxable. Also, if it's structured correctly, it comes with floor protection. See, a lot of people pitch the idea of an IUL becoming your own bank. These things need to be structured correctly. And again, last year I was a top-rated agent for these things, so I'm gonna make sure we set it up right. Let's dive into, property and assets. Do you own any property?
I do.
Fantastic.
Well, own as in, the bank owns it, Mike, but, I have a mortgage.
I got you. How big is the balance?
Oh, roughly about 350,000 now.
350. What do you got in equity? You know what the home is valued at?
It's valued at 6.
6. So you got 250 in equity. That's pretty good. Is
Yeah.
your payment PITI, or you pay the taxes and insurance separate?
No, it's included.
It's included. Okay, perfect. How much is your monthly payment?
2,800.
2,800. Okay, so basically what I'd be doing, I think we get the gist of it. After I go through property, I'm gonna start going through utilities. I'm gonna start going through taxes and insurance. I'm gonna start going through groceries. Then we'll transition to assets. My favorite one is assets, because if they start talking to me about their 401ks, what they have in mutual funds, in stocks, bonds, securities, etc., floor protection is beautiful. I like to ask them how long they've been investing, because usually people have encountered some type of market correction and anxiety at one point in their life. You know what I mean?
Mm-hmm.
That's good to talk about floor protection. Now, for everybody on here, I don't want them to get it confused. If you're running Smart Solve or Easy Solve, you shouldn't be doing IULs. You should be doing whole life policies instead. Smart Solves and Easy Solves are dangerous. You need to run target premium or maximum premium. It's never about the death benefit with IULs.
Understood. That's a good point, man.
Yeah.
Now, when you shift over to the whole life, let's talk about that for just a hot second, right? What whole life policies are you recommending, or which companies are you going with? Like, if somebody needs a larger whole life policy, right?
American National. I was running NLG, but I don't like the way they I'm just gonna be honest, I don't like the way they pay.
That's important. It's got to be good for the client. It's got to be good for the agent, right?
100%.
As long as you're not hurting the client, right?
Agreed. If I'm running 100K or less, I mean, I'll go with Ethos. You know what I mean? A whole life is a whole life. It's not going to make much anywhere.
All right, so American National for that. And so when we're going target premium, you use National NLG a lot, right?
I stopped using NLG because how long stuff sits in underwriting and how long they take to pay.
Are you going with F&G? Who are you using?
American National. I love American National. And then I was running Mutual of Omaha for a long time. But that became a love-hate relationship real quick, and I took an oath to myself to never give them my business again. And then I switched to Ethos. Ethos is all right.
Yeah, it's all right. I mean, I think it's only going to get better, right? And I think with someone, you've got a lot of expertise, Mike, in the financial services industry. Someone that's getting ready to jump into IULs is not going to be able to emulate, not to say that they can't, but typically it's not going to be, I'm going to go do IULs today and I'm going to do exactly what Mike Hamade is doing, right?
Yeah.
They're not going to quite fully understand it. So I think that Ethos is a great, jump off point. Wouldn't you agree?
I agree. Ethos will be the right jump off point. And then you could start using Moo a little bit, because Moo comes with WinFlex and, signed illustrations, revised illustrations, certain states. It's just going to be a nightmare for a new agent.
Yeah. So anybody that is not contracted with American National, like myself, I'm not, Sue, to-do list, please. Start off with, Ethos, and you can kind of graduate up into the WinFlex and start doing, more advanced illustrations, right, Mike?
Yeah.
And possibly NLG and F&G is popular as well. But those are more advanced illustrations. So if you're just getting into it, utilize Ethos and then move. All right, cool. So explain a little bit about your process in explaining how an IUL works to the client in like real simple terms, right? For a newer agent, how are you explaining it to your agents that are new getting into the IUL space?
I tell my agents less is more. I never really explain it, to be real. There's only a couple things that I do touch on. That's the floor protection, the tax deductions, and the non-taxable growth. Basically all you're doing is taking your money and allowing it to make money. I never tell a client this is your payment. I tell them this is your contribution. You know,
I love that.
Different psychology, because really, honestly, it is. This is your contribution. Yesterday, one of my agents scared the shit out of a client because, we always ask, do you have any existing policies? I guess this client had a whole life policy somewhere else for like 50 grand. And my agent ran her a quote for what she pays on that 50 grand. And he got her over 500,000 with Ethos, and he pitched it. And I'm like, why would you do that? That was stupid. You have to go not on not easy solve. You got to do max cash value. IULs need to be funded correctly, or your client's going to run into a lapse. And if they have floor protection, they're going to run into their cash value being triggered.
Right. Exactly. That's a big point, dude. I remember when I first got into in my career, and I started doing like Forrester's, Universal, the Smart UL, right? That was actually the first one that I wrote, but I remember which I'm not big on that product any longer, but I remember an analogy, right? You've got the COI, the cost of insurance, right? Mm-hmm. And so one of the ways that I always kind of like presented it to the client was, hey, Mike, you've got what they call a cost of insurance. So a portion of your payment, and what you say, your contribution will go towards that cost of insurance. The rest is going into basically a general population fund where your money is earning compound interest. Now, at a certain point, Mike, what you're contributing is going to cost the insurance company more money than what you're contributing for that cost of insurance. So in order to go ahead and keep your payment the same, they'll go ahead and start taking away from your cash accumulation. And eventually the policy is going to cannibalize it. You just eat away at itself, basically cannibalizing itself. And then the policy lapses. That's where most agents make the mistake. That was an analogy that was kind of like taught to me, and I always kind of remembered that and to explain to clients. But that's basically what you're talking about when policy is going to lapse, right?
Yeah, that's why I never talk about it to my clients, because the number one thing I don't do is set up their policy that way.
Correct. You know what
I never set it up that way. Like, I have an IUL myself. I'm 33 years old. My $600,000 IUL with American National, I'm paying about $800 a month, and I got preferred non-tobacco. But a 33-year-old for 600,000, let's be real, it should be like 250, 300. But I'm paying about 800 a month because I know max funded is the right way to go if you're going to do an IUL. Otherwise, it's dangerous.
Tell me about it. I pay 1,500 on mine, but I'm 58, bro. It's a little bit different.
No, I feel you. I do got a whole life and other bullshit as well, PBO, but I like the IUL. I like diversifying my portfolio. So when I go into assets with a client off this iPad, we're always speaking to really middle-class Americans. We're hardly running to self-employed people. And even when we do, self-employed people, sometimes they have FOMO. They can't have a 401k. So here's their 401k. You know what I mean?
Yeah.
But if we're speaking to middle-class Americans that do have a 401k, it's easy to cut through their contributions. We're going to diversify your portfolio, man. Why are you putting all your eggs in one basket? Do you really believe in putting all your eggs in one basket? How much is your employer contributing? What are you being matched? What's your average ROI? What's your growth? Blah, blah, blah. All right, cool. Did you take a hit in 08? If they're older, did you take a hit in 2020?
Yeah.
Did you take a hit in 2022 in January? When I shorted the Dow Jones, your 401k probably got raped. You know what I mean? That won't happen. So what I usually find myself doing is people at 401ks, we split their contributions. I don't add an extra financial burden to them. I help them diversify their portfolio. I don't take away their American dream of retiring with a 401k. We just add more benefits. If they're paying 500 into their 401k, drop that to 250, put it towards this IUL.
Got it. Now, so you talk about income, no brainer, right? Because I love your iPad analogy, by the way. So you've got income. We talk about that. Then you're going into property.
Yeah.
And then you're talking about, one of the things that some folks you've got your property, but that's also considered an asset, right? But you differentiate between the two. So you've got your property. This is your real estate that you own. And then you're going into assets such as
liquid, 401k, IRAs, stocks, bonds, securities, mutual funds, anything and everything that holds cash, or even bricks of gold if you got that too. Bitcoin, crypto, doesn't matter. Okay. Anything. The first thing
Aaron, go
is
ahead.
How much do you have in accessible liquid funds? Right away. Oh, how if we went to a crisis tomorrow, how much money do you have? My sale is built off everything that they're telling me. So if they tell me they got 20 grand put away, I'm already fast forwarding 25, 30 years from now to how much cash value they're going to have in this whole life for this IUL.
Okay.
If they're going into debts, if they got, like I had a client midway through signing back out and make me rewrite it to double his payment because he told me, Mike, verbatim, Mike, fuck my 401k, man. I'm not going to take a loan on it. I'm going to withdraw the balance and carry a little 10% penalties, and I'm going to pay off that Capital One that's at 29.99% interest. Let's bump the payment to 500. What does that look like?
Nice.
Yeah, so it helps because if you know what they have in assets, look, man, people are not going to touch their checking and saving to pay off debt. They're not.
No.
It's not going to happen. But if you got a 401k and something you're really not touching, and you could free up 500 to 1,000, maybe even $1,500 a month, because the compound interest on debt, the minimum payment, you're spinning your wheels. You're not going nowhere. So people will tap into their assets to take care of that debt to get some breathing room. Listen, people live in a fantasy land. If they want to be stupid and pay off their Capital One and their American Express and free up $2,000 a month to go get a Mercedes, they're going to do it.
They will. They will. So you got income, property, assets, debt, right? So you're getting that big financial picture, right? How are you going to smack somebody in the face with a dose of reality that they're 58, 60 years old, in their 50s, whatever, and they just have not set themselves up properly financially? Like, how are you going to tell me, like, Mike, if I had, I own my home and maybe I've got maybe 50,000 in 401k and I've got the same amount of money in debt, right, between my cars, and maybe $20,000 in savings. What are you going to tell me to help them? Or number one, are you going to go whole life? Or are you going to decide to go IUL? Like, how are you going to tell me to go ahead and this would be the best thing for me?
Listen, man, Shannon, you've done a great job, man. You got about 70 put up. You're 7 years away from retirement. Inflation is a motherfucker. We both know that, right? So look what I'm going to do, my brother. By the age of 66, with this thing that I'm structuring, on top of the 70 grand you already have put away and whatever your 401k is going to grow at, we're going to add maybe a nice little 20,000 to that. And then I just pivot. I'm not going to hit you with reality and shit on you, because through this conversation, you already got hit with reality. You know what I mean?
Yeah.
That's the conversation for the client to understand the reality without me being the asshole. You know what I mean?
That's awesome, dude. That is awesome, because I think some agents would want to get, kind of like shame them into doing this, right? And you don't want to do that. Like, you complimented me right away, dude. I love that approach. And that's the best approach. in my opinion, probably the only approach, right? Hey, man, you've done a great job so far.
Yeah. Let's just help you accelerate.
Yeah. But the other thing is that you didn't say, dude, this is going to help you. And, all the, the bells, rings, and the whistles and everything else, and like make it sound like I'm going to have all this cash accumulation. You're like, we're going to add about another 20,000 to that.
Yeah.
Right.
That's it. Why not? And then, bro, let's help your tax deductions. Shannon, do you get tax refunds at the end of the year? No. You know what I'm saying? Yeah. Let's lower what you pay. So look, check it out, Shannon. We're really going to accelerate your retirement, man. Call it in the next 8 years. We're going to lower your taxes a little bit more through this contribution. I'm going to get you an extra $20K by the time you're 66 on top of whatever it is you're doing right now and whatever that grows at. And the cherry on top, brother, I really don't care for the stuff. It's boring, but the cherry on top is you're going to have $150,000 for your family, God forbid, if you die. That's it.
And are you going into the living benefits as well at some point?
If I need to,
Yeah.
I like to reserve as much arsenal as possible. What I catch client or agents doing is they speak too much. They oversell the benefits and they just speak too much. Like, you got to reserve it. You got to have ammunition.
Again, getting back to less is more.
Yeah,
I love it.
I just roll into it.
All right. I love the approach. It's simplistic, but you understand the basics of the IUL and what it can do, and you hone in on that, right? A lot of people will hone in on the life insurance and living benefits. This is more geared towards, tax-free growth, right? Assisting in living, in retirement. I love it. Now, what would you say the average premium is for your brand new freaking agents, dude? That are like, what is the average premium?
Are we allowed to talk in numbers, or do we have to say
we can talk in numbers here, man?
I don't think there's one person in my office making less than 15 grand a month, and that's just on the low side.
Mm-hmm.
My boy Sam, he's my right hand, Sam Shihab. He's pulling about 40, 50 grand a month.
Mm-hmm.
Started with me in July.
There you go.
And he cracked almost 300,000 for the year, which was only 5-6 months. We run a different module though, I don't want to set the wrong expectations on agents. I'm going to be honest with the agents in this chat. You're not going to get to that level buying $1 leads or $5 final expense. It's not going to happen. You got to put your bread up. You really got to put your bread up. I spend 5 to 10 grand just on data sweeps every month, probably another 30 in leads on my agents, and God knows what else. Tech, everything, it just adds up. So if you can scale quickly and put your bread up correctly and have the right technology, you can make 100 grand a month easily. I did my second month. It was done. I started in March, really.
Yeah, that's crazy, dude, to hit, 1,000 families, right? 1 million. Dude, 10 months, 9 months. Come on.
Yeah.
Like that's crazy numbers. And these numbers are possible. I think that some people are going to say, I can't do that. Well, you can do that. If you put in one more, all you have to do is add one more freaking word, right, Mike? I can't do that unless, right? Unless I do what Mike did. It's possible. Like you've proven that you can do that, right? So it's a mindset, right? Yeah. And you have to back it up with action and processes and systems at work. Now, so your guy that did that 300,000, in what, 6 months, 5 months, something like that, right?
Months.
What is his? Let's talk to the agents that are maybe afraid to spend and invest. What does his lead investment look like per month? What he's ponying.
I love him. I put up all the money, so he has a different comp. You know what I mean?
I got it. I got it.
We
So,
have,
well, what's that investment look like?
I spend about, on him, we were running through P&Ls about 2 weeks ago. I like to go through P&Ls with him because he wants to be at that higher comp level eventually and self-fund everything for himself. So I give him transparency and show him what it's like. Um, I spent about 12 grand on him.
Okay. That's realistic. 12
Yeah,
grand and he's doing 40.
yeah. And off that 40, I mean, I'm at least doubling my money. At least. You know what I mean?
Mm-hmm.
If yeah,
Well,
well,
that adds up, dude. That sounds about right because the average ROI within FFL is slightly above 4. I think like a few years ago when I was tracking, it was like 4.3, something like that.
yeah,
So
it's
if you're
about
doing
good.
12, 4, that's 48. So you're right there, 3.5, a little bit above 4, but you're definitely doubling your money.
Yeah,
Like if I spend 5 and I make 10, I'm good.
yeah.
And so you have to spend money to make money here. It's just you have to. And I think that we need to get away from, like what you said, spending money on the dollar, $2.50. You can make money on them. But if you're planning on getting into the IUL space, you're not going to have an intelligent conversation with somebody on this level with a
No,
$2.50 lead. You might get one, but
you're
it's
more
highly
likely to get a
unlikely.
time too.
Would you agree with that?
You're more
What
than
was that? You
likely
broke up.
to get a chargeback on those kind of leads too.
Amen to that. Now, I know that when you were talking with John on the telesales workshop, you were big on the diamond social media leads, the $30 leads, and this and that, right?
Yeah.
It's a much higher intent lead. What other leads are you looking into in investing? Are you doing any mortgage protection?
I tried the mortgage protection and ended up with mostly 70-year-old pluses. Bro, I'm so good on running you through Aetna right now. I didn't like those. I really like the social media diamond protection. I do a lot of target marketing too, as well as ad funnels and data sweeps. Like I have a monster system that can scrape data on, when you type some on Google and it pops up on Facebook after. Like I know how to
Mm-hmm.
I have a system that scrapes data like that. So if somebody types in insurance on Google, I could find it. I could find the source that they went to and everything. Throw it in a dialer, diversify my team too. Like, listen, there's going to be introverts that you recruit that are not cut for this, but you can move them to something they are cut for, like denials. In the CRM, we'll move a lead stage to denial. If an agent can't work it and they're spending too much time trying to get this client approved, like running Prosperity or American Amicable or F&G tedious apps, move it to the denial team. They get 25% back end,
Yeah.
So it's good to have a team that can handle all types of leads. The CRM is very important because if you buy these expensive leads, I don't care how many of you say I can do it, I can call these people, I can do it. No, you're not going to. You're not going to keep typing in their phone number in your damn phone and constantly manually dialing them. You're not. That's going to last 2-3 days before you get sick of life. So if you buy these leads, you should have a CRM and put them in that mass dialer.
Now, what if we have that? That's a good point, right? But I don't want to discourage anybody either. At the same point, when people come here, we got to meet them where they are. So if they have to go ahead and dial, right, it would be with the intent to scale to having a CRM system with auto dialing, right?
I agree, but if you could pay $30 a lead, you can pay $109 a month. I get no benefit from this. I don't own the system. You know what I mean?
Yeah, there you go. Good point, dude. It's $110.
That one.
You're right, dude. You're right. You closed me, bro. You closed me. I think you just closed everybody else. All right. So get a damn dialer. Cough up $110, right?
Yeah. Sometimes the price is not always the cost. You know what I mean?
Love it. Love it. Now, I want to be respectful of time, and I want to open this up because I'm sure that there's a lot of great questions that people have, right? So, Mike, I truly appreciate it. But before we get into that, just quickly spend maybe, well, you know what? I'm going to hold this off until the end. Let's go ahead and open it up. I know John's probably got some great questions from the last time. Let's go ahead and open this floor up a little bit with any questions.
Actually, I'm going to save it for everybody else.
All right.
I have a question. So
Yeah.
when
Can you put the video on, Angie?
No, I'm not dressed. Sorry.
We only need to see your face, but okay, got it.
Okay. When structuring an IUL, Mike, why would you run it with target premium versus max accumulation?
No, target premium is the minimum that I do. I won't do minimum payment. If I could do max accumulation or max funded, that's the ultimate goal. But at the bare minimum, target is where I'm aiming at.
Okay.
Yeah.
And again, stress the importance of target.
100%. Again, that COI is crazy. You know, if max funded is always where you want to go. No doubt. No doubt that's always where you want to go. But a bare minimum, target. You know, I'll run target if a client has the flexibility to apply more in the future. MEC avoidance still within those limits, we'll be fine.
And how do you explain that to the client? Say, hey, Sue, we're going to go ahead and set this up for target. The benefit of that for you is, how would you explain that?
If the client has a $250,000 mortgage, for example, and we discover all they can really contribute is $150 a month, and target premium got me that $250,000, I'm going to break it down to the client. Listen, when your debts are paid off, when this is freed up, when your car is paid off in 3 years, you need to call the insurance company and change this payment to X, Y, and Z to accelerate your safety net for when you retire, for this, whatever the emotional benefit it is that I can make relevant to the client. I never make it about the number, but I do break it down that, look, you need this $250K, obviously, right? And this is contribute monthly. This is going to get you that, but I do want you to understand what you should be paying is what the max premium would be on $250,000, and what that's going to do for you is X, Y, and Z, the difference in cash value. So when your car is paid off after that 2-year note, start max funding the shit out of this.
Cool. There you go. Gives you the room to go ahead and just like your 401k, if they have a 401k, you can go ahead and elect to contribute more. Same thing here. As your cash gets freed up, you can elect to contribute more. This is a flexible premium, right?
Yeah. That's why people take 30-year mortgages. They can pay it off.
Yeah.
You know?
Next question. Don't be shy.
Thank you.
No problem.
Anybody else?
Hey, my quick question, man. I'm about simplicity when it comes to people. I don't like confusing people because I tend to confuse me. And then when I confuse me, it's like, it's over. With that being said, the way I basically sell the IULs, because I do it, don't shit on me now. I write a lot of IUL Express, right? Don't hate on me. But the way I finalize that is because there is this thing called cost of insurance, and I don't want to go through that with a client. So what I'll say is, hey, Mike, just do yourself a favor. If you're ever going to take money out, don't be a gavone and take all the money out. Make sure you leave at least 15% cash value in there so the COI does not exceed your cash value. Am I on the right track?
Yeah. No, I even on a max accumulation or a target, I always tell clients the same thing. If you're going to get crazy with it, leave a reserve in there.
Gotcha.
Don't pay the whole thing. Unless you're trying to take off to Dubai or something and get you like 4 wives and never plan on coming back.
In case you guys don't know, when you do the minimum premium, the cash value is not going to grow enough to outweigh your COI, which is cost of insurance.
Yeah.
So just know that. Now, you don't see too much of that on the illustrations. I think the only one that does that, Shannon, maybe Forest is on their Smart UL. Like you'll see the three differences. I don't remember seeing Target, Modal on
Yeah.
any others.
Foresters is generally more expensive because
Yeah.
they already structure it the right way. But I just hate them because they straight up. I sent corporate the email and everything. They owe me $180,000 right now. I'll never fucking use them again.
Well, all righty. Sorry to bring that up, man. Thank God it's 9:52.
Yeah. I already said I'm not big on Foresters, and I'm not going to go into why. But
Every time I ask, "Where's my commission?" they come back and respond with, "Your advance is capped at 3,500 at 75% annualization." That's not what I asked you, you donkey. Where's my money?
yeah, right. Pay me.
Yeah,
Show me the money.
100%.
All right, let's do this. All right. Are you're doing Zooms or are you doing on the phone?
On the phone.
Me too, bro. I don't do Zooms. I freaking hate it, right? I don't like it. That's me. Some people do it. If that's your thing, keep on doing it. Me, I'm on the phone. And so how are you showing the illustration? What I do is I just text them, right? I'll take a screenshot, take a picture of the computer screen, and I'll send it to you and say, hey, Mike, like, all right, you get the picture? Yeah, let me explain how this works, right? And I show them that. That's the only thing I do, bro.
To be honest, we don't even run into that.
Even better.
The iPad is going to help you. If you run the iPad based on the agenda being a financial professional to help your client come to self-realization, and you direct them in the right position and sell on emotion, not on logic, right? The logic will work itself out. You'll be fine. You'll never run into that. Once in a blue moon, I've probably had, out of all the deals that I've written, I've probably done 2 Zooms. I can remember their names. One of them was Jesus Habibullah of Florida. I love that guy. And the other one was a couple out of, I think they were out of Florida too, but they're originally from New York. They just had trust issues. That was it.
Sure.
Yeah, 100%. But that was it. You're talking about almost 1,500 families in total. All I ever did was 2 Zooms. You know,
Jesus Christ.
You don't need to look at companies like Rocket Mortgage. Look at companies like Loan Depot, right? These companies are taking social security numbers over the phones. They're taking bank account information over the phones. They're taking deposits for an appraisal over the phone. They're not doing Zooms. People don't need to see you. I don't know why agents are still stuck in that mindset. They don't. Look at the top 10 Fortune 500 companies. They're not doing Zooms and in person. Get out of that mindset. It's 2024.
Dude, you are 100% pure speed and efficiency, man. I love this. Like whatever it takes to be more efficient, I love it. I've taken away a lot from this call, and I appreciate you more than you know, man. I know a lot of people have been. One thing I would suggest is, for people to like have a great mindset heading into this, right? Because if you can get a damn social security number over the phone, if you can get a checking account number over the phone, right, then you can do Index Universal Life too, right? You just need to do more of it. You need more activity, right? Let's talk about activity, bro. I know what you express what your morning schedule is like. I love it. You don't touch your phone for the first hour. You're in bed by 10 o'clock at night. Before you go to bed, you probably already know what you're doing the next day. So you're not stressed about what you're going to do at night, right? You have a good night's sleep. You get up. You're working out. You're spending time with the kids, right? And then you get to work. What does your work schedule look like? What time are you sitting down at the desk, and what time are you hanging up?
8 a.m. to probably 10 p.m.
8 until 10. That's a lot of hours. It is.
It's fun though. Time flies. We got almost all the agents in the office. I have a mortgage company as well. The square footage is huge, so I usually just ride around on my scooter and annoy people during the day. But it's fun. It's nice, man. It's comfortable. You know what I mean? The office is comfortable. The vibe It's vibrant, and the time just flies. You don't even notice it. Like in the beginning, though, I never saw my family. Like in April, when I did damn near 200,000, if not more, I'd be coming home at 2, 3 in the morning sometimes.
Mhm.
You know, because most of it was knock out a lot of front end, knock out a bunch of back end, get ready for the next day. Once you're locked in, man, you don't want to leave. That's the problem.
One question. Is the juice worth the squeeze?
Oh, fuck yeah.
You heard it, ladies and gentlemen.
Oh, most definitely.
From your mouth to God's ears, bro. Fuck yeah, it's worth it. I love it. Mike, you're awesome, dude. I can't wait to see you at convention.
Thank
Shannon,
you.
And
Shannon, I'm sorry. Can I interrupt? I got one last question.
yeah, go ahead. Go for it, bro.
Mike, I'm putting you on the spot, bro. I texted you last week. You never answered me.
What
Can
happened?
you give me word for word what your sexy text is to people? We spoke about your guy having a sexy text when he sends out text messages to people.
Yeah.
Can you give that word for word?
Oh, that's what you meant. My bad, bro. I got
What do you
like
think
six.
I meant?
Um,
You saw sexy in the same line and you got all nervous?
nah, I literally just text clients, "Hey John, this is Mike regarding your online inquiry. You free now?" What online inquiry? What are you talking about?
Now,
Or
is that the same exact text that you, because last time we spoke, you said that your caller has one sexy text.
my caller. Let me see. What does he do? Oh, that motherfucker gets crazy, bro. Talks about living benefits and this and that, and he gets annoying. But for me though, my sexy text is just straight up, John, it's Mike, call me.
Right.
Mike who? Everybody knows the damn Mike. The moment you respond, Mike who, I'm triple dialing you. My boy, I know you're by the phone. Johnny, why you ignoring me? I'll literally talk to a client like that. And that's what I asked the client. I called the client 7 times in a row one time, bro, because I ignored after 2 rings and then let it ring. I knew he was by his phone. I was just mad that day. I just wanted to annoy somebody. My objective was to annoy somebody. As soon as he got on the phone, I'm like, Dad, go. Why you make me think you was dead, bro? It's like, who is this? I was like, your life insurance agent. I never talked to the guy in my life. But yeah, ended up whole family. That's just how you got to be. You got to be a madman. You're there is no sexy text specifically. All I could say is don't be too professional.
Be real.
Be real. Be human. Be funny.
So
you know?
less is more.
Yeah.
Be
Hey,
real.
can you guys hear me now?
Yeah.
I've been trying to unmute and my speaker was messed up.
Oh,
I
good.
just want to ask a quick question before we get off. I know it's almost 10. You talked about how self-employed people, they can't have a 401k. So if you and I were to meet, I'm self-employed, I don't have a 401k. How do you approach or pitch me?
Same thing every time. Income, property, assets, debts. I'm gonna find out. You're gonna find out as the client what you can do and what you can't do. And I'm just gonna put the solution
No,
on.
I'm not talking about an appointment. I mean, we're just out and about. We meet each other in general conversation.
I'm gonna send you some shots. I'm gonna make you
Okay.
like me. Take my number down. We're gonna talk business later.
Okay.
That's what I like to do. It's kind of like
You got
when
an
I
elevator pitch. I think Tiffany's probably asking about an elevator pitch, man. What's your elevator pitch?
send you a couple shots, crack a couple jokes, let you spark the question of what I do, and I just tell you I show people pimp their money. That's it.
There you
That's
go.
what do you mean pimp their money? Yeah, bro. I show people how to pimp their
Pimp my money. Jesus Christ.
I show you how to make money. And I'm kind of an asshole. Like my agent had a $25,000 annuity the other day and wanted me to talk to the client. I told them no. So it's like if you're like that, like people are gonna respect you and they're gonna want to put their bread up with you. But if you come off with an elevator pitch on some salesy shit, it's not gonna work. I like just build the relationship first and leave them thinking about you, and then they'll come to you. Bait. if that makes sense.
I love it, man. I love it.
Thank you.
Well, Mike, you know, less is more. Y'all start pimping everybody's money, man. I love that. Pimp your money. Pimp my money, G. You need to start a podcast, bro. Pimp my money.
I feel like
Mike Hamade. Hey, man,
I'm sorry.
I want some royalties off that shit. It's all about the money, bro. Mike, thank you so much, man. Can't wait to see you at convention. And you drop, man. So we could do this over and over and over again with you, man. But like you said, less is more. Keep it simple. Just be yourself, man.
I appreciate it.